Hello, everyone. Welcome to the BioVerse episode 29 recap of Asian biotech first quarter 2026. China still leads, but Korea is catching up. It's really my great pleasure to welcome everyone today. And by the way, today is April 8th, 2026. Welcome everyone to join BioVerse. And it's really my great pleasure, not because the topic is so exciting, also because I'm talking to three of my best friends. We know each other so well. Going to be very interesting, very exciting, and insightful discussion today. In case you don't know who we are, I'm gonna share some really quick introduction of what is a BioVerse. I can share the screen. My friends and colleagues, please give me a thumbs up whether you can see the screen. There we go. Where is it? Too many windows always. All right, I hope it's coming. Like I said, this is today's topic and a little bit disclosure since we are talking about something about biotech. We may touch base on a little bit about investment, but you should not use this as your advice, just for your educational purpose. And a little bit about BioVerse if you're diving in the first time. BioVerse is really kind of a joint venture spearheaded by us, iSweet community, and also collaborated with SAPA GP, which is one of the largest and the oldest ethnic Chinese focused pharmaceutical professional association, as well as BioSpark, which is Boston-based with a global membership focused on biotech R&D and early stage investment and startup. I want to give a quick introduction of my friends and also speaker today. And before we dive into this, now you understand why we invited them. So Ms. Fanging Zhang, she is a partner and she's leading the life sciences practice of Greater China and McKinsey with decades of experiences advising clients in the pharmaceutical and biotech industry. James Lee, he's a venture partner with Fraser Life Sciences. He's also chairman of a newly formed company. Exciting one. He'll talk a little bit more about that. Good friends. And Marc Appel, he's based in New York, if I'm not mistaken. I don't know where you are, Marc, right now physically, but your office in New York. He's a founder of Pacific Bridge New York, which is a new biotech investment fund. All of them, by the way, have spent a lot of time in China, and actually in the past month in March, they either organized, spoke, attended one or all three those major conferences focused on East Asia biotech space. That's why we invited them come over, share their insights, especially insiders' insights of this exciting space. With that being said, let's set the stage a little bit. In our title, we talk about the Q1 biotech, Asian biotech performance. Obviously, we are a little bit through this probably most interesting topic right there. If you're talking about Asian biotech, you cannot ignore the China to West deal making activity. So, thanks to the help from our friends from FarmCube and also my own company's internal analysis, we get a first quarter deal making activity from China to the West companies. This is a chart really, I would say, self-explanatory for those who cannot look at the screen. Let me describe to you. So if you look at the deal making activity of this China to West deal making space in 2024, 2025, the whole year and the first quarter 2026, I can tell you the first quarter of 2026 upfront payment already on par as a whole year of 2024. And actually, a total deal value of the first quarter of 2026 already surpassed the total deal value of the whole year of 2024, right? So if you, let's say there's a first quarter momentum of 2026 continue for the remainder 3 quarters, what happens from payment of 2026 could reach to $16.3 billion US dollars, and the total value could reach up to more than $240 billion. Both numbers massively surpass the total deal value of 2025, which was a record-breaking years already. In case you cannot see the chart, in 2025, the China to West deal booked $7 billion upfront payment and $135.7 billion total value. Again, let me repeat, in 2026, if the whole year continue momentum as the first quarter, which just finished, they will book over 16 billion upfront payment and over 240 billion total value. That's massive. But again, that's a huge assumption. The remaining 3 quarters are going to continue. So that's a stage. Looks pretty good. The Asian biotech looks really strong, led by China. But China is not the only story, right? So, like I said, we really want to recap the sentiment, observation, and chatters from the 3 major conferences. Our speaker absolutely were insider or speaker or attended. I get a lot of insights. So I just want to capture 3 highlights, right, from each of the conferences. The first one is the East-West Healthcare Summit in Seoul. And what I heard, Fanging kind of talk a little bit more, Korea Biotech really focus on first-in-class drug development because they try to differentiate themselves from China's largely best-in-class focus R&D activity. Regarding BioChina in Suzhou, there's a lot of Western investor and executives doing quote-unquote treasure hunt for earlier underwater asset in China. So that's a really highlight from the BioChina conference. The last one, CHIC conference, which full-name is a China Healthcare Investment Conference in Shanghai. And there's a new exciting stuff called reverse Newco were discussed. We'll dive into this a little bit more. With that being said, now it's really my great pleasure to invite the speakers to share their first-hand experiences and their observation. Let me start with the Fanging, right? So the first question really go to you. Sorry. Let me stop sharing the screen now. Let's just get into the discussion. We'll get back to the screen later. So Fanging, with the East-West Healthcare Summit and in Seoul and your focus on Pan-Asia trend, what insights did you gather regarding the rise of Korea biotech industry? Because really in Korea. And how are those companies strategically positioning themselves to differentiate themselves from others? I mentioned a little bit, but please provide more kind of colors from your observation over there.
Sure. Thank you, Leon. First of all, a pleasure to be on this podcast. So very much look forward to the discussion with Marc and James. I wanted to actually first start with a couple of data points around Asia innovation, because often we actually are familiar probably with what's happening in China. So Asia, very simply put, today Asia is the largest region in terms of innovative pipeline. Today, Asia contributes 43% of the total innovative pipeline. Guess how much is coming from US? 33%. So that's number one. Number two, from a licensing point of view, Asia also accounts for 40%, if not more, licensing deals coming from Asia last year. Last year, total deal volume, roughly 100, around a little bit over 100 deals coming from China, from Asia. Number three is Asia is not only innovating in ADCs or only innovating in oncology. Of course, these are more kind of popular and hot areas, but across Asia markets, specifically looking at China plus Korea plus Japan, you actually see a full-blown of modality play as well as therapeutic areas play. Last but not least is actually, I want to highlight, we often think about licensing as kind of the place to play in China. We're actually in China or Asia, but we actually believe there's a under-noticed or underappreciated opportunity, which is leveraging the speed and cost efficiency in the region. That includes China for sure, but even in Korea, when we look at patient enrollment speed, it's also actually could be fast in some of the therapeutic areas. So that's a kind of a snapshot on Asia. If I just spend a couple of kind of nuggets around Korea, if you look at within Asia, Korea contributes 14% of innovative pipeline. So of course, China is around 70%, right? So China still by far is a leading region, but Korea is actually not too bad. And growth rate wise, Korea also has been outpacing the rest of markets except China. When it comes to licensing deals, Korea is actually 20% of Asia's share. Japan is 8%, right? The rest 70%-ish and goes to China. So if you look at 14% pipeline, but 20% licensing, and some of those deals are actually quite sizable. For example, ABL actually has striking deals with Eli Lilly, with GSK, Both deals are valued at 2 to 3 billion, above 2 billion in total ballparks. So I think those are actually really speaks to Koreans' advantage. When it comes to therapeutic areas, oncology is actually even more indexed than in Korean. But there are also bets being placed in other areas, right? Modality-wise, it's a small molecule, cell gene therapy, and a little bit around protein degrader. Those are the most kind of visible modalities that we see. So in short, we actually say, despite Korean does not actually raise a tons of capital, if you look at VC financing compared to China, but in terms of both the quality and volume of innovations that they are generating is actually quite impressive. And the growth momentum is also very impressive, right? 17% in the past 2-3 years. I think that's actually globally, if you put Korea in a global context, I think that's a very in place area to take note.
Fantastic. That's a very, very good, like, kind of said, like, ground truth, right? The landscape. Any other comments from James and Mark? I know, Mark, you also went to the same conference, right?
I did, and I would say maybe I won't. I think Fanning already did a great job giving the broad sweep of the of what's going on and all the mega kind of major trends. Maybe I'll just be a little bit more granular and say that I could say I in particular, having not spent a lot of time in Korea previously, was just very impressed by the quality of the early science there, and also the ability of the Korean ecosystem to take that science a bit more forward, right? I think Japan always comes up in these discussions as sort of the third big country, but Japan has this challenge of a lot of great early science, but an inability to really translate that into entrepreneurial endeavors that are then able to enter the clinic. What was interesting with Korea is there was a good number of opportunities that had made their way down the pipeline with the right venture capital support. I think they struggle in globalizing their technology, and that's probably why this panel is here, because we're talking about how do you take Asian innovation and think about global potential for a lot of these opportunities. But I think they're really good at actually just getting the ball down the pike. There were a lot of early clinical opportunities there that I was surprised to see because I hadn't necessarily recognized the ability of them to take early science and translate it. And I do think it's a healthy mix of truly innovative, first-in-class programs, mixed in with actually a good number of sort of new takes on older targets, more similar to what you maybe the best-in-class is maybe the right way to frame that of what you see in China. So it was a little bit of a maybe a blend of the truly innovative stuff, higher risk, maybe higher reward, with a little bit of the lower risk opportunity set. And that was actually a nice mix because I think it can attract a wide range of different types of investors, entrepreneurs, pharma companies to the region, and maybe why it punches above its weight on deal activity. There's also a really unique factor in thinking about the Korean market in that I think even more so than in China, there is a need for Korean companies to validate their pipelines through deal making, right? I think China, there's
Mm-hmm.
some desire to do that, but I think also China is a very large market in of itself, so maybe you don't need to do that all the time. I think in Korea, because it's a smaller country and they need to sort of validate everything externally with third parties to really move their programs into the mainstream or publicly
Mm-hmm.
list.
Mm-hmm.
There's a real, not even just desire, but almost pressure to transact or to get deals done.
Mm-hmm.
So I think that
Mm-hmm.
allows them to sort of punch above their weight on the deal side.
Mm-hmm. Yeah, yeah, fantastic. So now probably I'm gonna go to James next. So first of all, congratulations to the launch of your first Chinese asset back in Newco, right? So early this year, I believe that's one of the deal announced during JP Morgan. Nexus Therapeutics, in case people don't know, Google it. You will find this impressive lineup. You are a chairman. Also, you are the organizer, obviously, of the CHIC conferences, where many of your peer Western investors were there, right? So my question to you is, what new strategy Western investors like you and your peers are using to access China biotech innovation in 2026? What's a new trend?
I think you should ask this question to Mark. I mean, Mark has been the
Mm,
you know pioneer of the other Western
mm,
representing Western investors coming to China and there are lots of groundbreaking work and in China, right, Mark? And I've been seeing you and watching you all the time, showing up in China, different events, right? As Leon said at that conference called Treasure Hunters. So I I've been working on cross-border transactions in almost past more than 20 years, right? In different roles, either as a multinational company executive or investor, or as a entrepreneur, now back to as an investor. I think the logic is very simple, is that people are leveraging the strength of different places to in a best way to develop medicine for the patients we serve, right? So look at in China these days, because of the past 20 years, I think the development of the whole biotech industry, because of the returnees and also local talents, and you know, grown in past 20 years. So we have seen tremendous, explosion of the pipelines of the different, in different modality, different therapeutic areas in China these days, right? And it's a combination of the talent, investment and incentive, etc. So I think naturally, these things now getting lots of traction or attention from the West and the people coming to China to try to get these assets. But in long run, I see a tremendous complementary uh, uh, um, uh, uh, resource or skill set, between U.S. and China, and U.S. companies will leverage tremendously on the speed and cost effectiveness of the development in China, versus Chinese companies who may leverage the U.S. Kind of call it 0 to 1, or the original innovation, and the develop the assets together. So I see it's a constant flow of the work, and around either China, Korea, Japan, or U.S. I think capital will chase the most effective way to develop medicine, and Nexus is a great example. You look at the a development. Basically, it's a first-in-class DPI, formulation for a PD3/4 dual inhibitor for COPD patients, right? So we saw that, and we said, okay, let's bring that to the U.S. and working with our partners and the co-investors and build a new company. So you have many things or many assets like this. Then you also see people, go after the early assets, or U.S. companies. Mark can probably elaborate a little bit more. Is that U.S. companies nowadays with the new modality or new mechanism of action, and go to China to do development, right? So raise money in the U.S. and go to China to development, and it doesn't matter you call it the reverse Newco or Newco, but I think that people chase the speed and effectiveness of the development, and then you see reward, in that approach. So I think that's my take.
Yeah, Mark, since James Q you, so what's your take on this? Let's just focus on traditional Newco first for a second. You also did a Newco, right? Like with the hub and spoke with the formation bio, right? So probably you can share with us your traditional Newco experience. How did you find that one? What did you learn over there? What's your advice, to your peers?
Sure. And I will say James is far more of a pioneer than I am. He's been doing this for decades, and at least I have a few years on my belt in this particular arena. But I think he's seen the full gamut of it. And I think a lot of what he said is exactly spot on, both on the Newco and on the reverse Newcos. With regards to some of the Newcos we've been looking at, maybe I'll just make a more general point about Newcos, in that I think when we originally conceived of Newcos like 2, 3 years ago, everybody had in their mind it's this very traditional pull an asset out, you plop it in the US or Europe, you put a number of investors around the table and put a team around it, and you develop from there. And I still think that obviously that model works, right? And there's a number of those getting done, and we're actually, working on some of those even right now. But I do think there's sort of a greater wealth of type of deals that are actually getting done, right? There's joint ventures, there's build to buys, there's just companies going in there and adding to their portfolios, or even repositioning their portfolios through acquisition of Chinese assets. And so it's a much wider range of deal structures and types. And I feel like Newco maybe is more that becoming more of this generalized term just to refer to that whole mix of stuff you might do. I mean, we're looking at that full range of deal type too. Like, we're not just doing down the fairway traditional Newcos. We're actually even probably more excited about sort of joint ventures or other types of structures that allow us to bring our capabilities, our kind of cross-border capabilities to bear, but still allow maybe more upside to be retained in certain cases by the Chinese company. In some cases, leveraging actually capabilities from across. You mentioned, I think Finding did a great job highlighting some of the capabilities in Korea. I mean, we've looked at the ideas of, okay, can you take Korean assets, Chinese early development, US late development, put it all together into one global company, right? So I think the whole idea that these are of cross-border and really thinking globally when you're building a biotech company is sort of the right way, and leveraging the best of each ecosystem. And so that's really the kind of the overall approach that we're now taking, and why I think if you look out maybe 12 months from now, when we're talking about our portfolio, it's going to be a little bit of there's not going to be a one size fits all. It's going to be a very diverse array of opportunities.
Fantastic. Yeah, since we put a new call in our advertisement, let's dive into this a little bit more. Let's really want to start with the Fanging and James, but obviously, Mark, please feel free. So I want to give people a little bit, my narrow definition, my personal definition of new call. Really is that we're Western biotech companies partner with the Chinese biotech to develop their early stage asset in China, right? Where Chinese company typically have the majority of the assets at China rights, but also hold a minority ex-China rights. This is a kind of emerging trend, right? There's quite a few examples. In this, the first quarter of 2026. Actually, how does this, like James, you already mentioned a little bit. So, this is a little bit different from the traditional new code, but, based on Mark, you said this new code definition is really kind of not really useful anymore. Let's just use this my narrow definition as starting point. Fangling, James, Mark, feel free to comment what you have seen, this reverse new code, how this actually been evolving. Probably Fangling, I can start with you. Since you have a broad picture, right? You have seen like the small guy, big guy, and investor, everyone.
So can I just say something before Fanny speak?
Please.
I think typically people like Mark and myself, we do all the work. Then Fanny will summarize that and make a theory out of that. So
Okay,
then
so you
become
want
a
to
new
start?
theory. New thing. No. Fanny, it's perfect to Fanny to start that. So I applaud the McKinsey guys. They really can summarize, synthesize the work like Mark and I do, then make that become a theory, new approach. So Fanny, it's yours.
Well, the pressure is on, I guess. Yeah. Well, joking aside, I will leave the kind of the mechanics and really kind of the deal making side to both James and Mark. I think they're more than qualified, than I talk about it. I think from a strategic point of view, right, why this matters. In a broader context, if you look at the R&D productivity metrics globally over the past decade, not much improvement has happened, right? Despite many attempts and many rounds of transformations. If you look at the timeline, it's still roughly 9 to 12 years end to end. If you look at the cost per FDA approved NME, the number varies, but it's anywhere between $2 to $4 billion. That's the benchmark I have seen. Right. So if you think about if we extrapolate this for the next decade or next couple of decades, is this really sustainable? The answer most likely is not. Right. And then you now look at in China/Asia, you have a place that actually can be your time to market accelerator. Right? We talked about discovery speed is 2 to 3 times faster for a known MOA. The enrollment speed in clinical trials could be 2 to 5 times faster compared to global benchmark. And on top of that, these can be done in a more cost-efficient way, which means capital efficiency. Right? It's one third to one half of the cost compared to the global benchmark. So then I think that's why you should also look at Asia and China as a productivity leverage. And it's high quality. I think the quality will continue to improve, but it's faster. It gives you time to market. It gives you a better or even higher probability of success for your downstream clinical trials if you are doing the right early clinical seeking in China. Right. If I really extrapolate this into the next 3 to 5 years, look at how in the Chinese central government's 15th five-year plan. So for those who are not so familiar with this, every 5 years, the central government actually define a blueprint of the economic and the social well-being priorities for the nation. Right. This has been now ongoing for several decades. In the latest version that's approved in March, there are 2 things that's worth noting. One is actually biomedicine is being identified as one of the emerging pillar industries. So it's similar to electric vehicle status 5 years ago. Secondly, biomanufacturing is being highlighted as one of the emerging industries. So you think about as the next wave pipeline, right? So both these combined, it really puts biotech sector, I think, in the kind of unprecedented strategic importance in China. So I think what will come to it is actually a lot of capital, more innovation conducive environmental policy, very systematically deploying talent. And on top of that, AI, robotics is also another priority for the country, right? So I think there's a little bit of this kind of a flying wheel, if I may, of these right elements is all coming into play, which actually makes me to believe that the unique value proposition advantage from China and Asia in helping companies, whether you're a big, large pharmaceutical company, mid-cap, or you're a Western biotech, or you're investor, you cannot afford not to look at Asia. You cannot afford not to integrate Asia and China into your global strategy. So with that, I hope I have warmed up the stage for James and Marc.
James, I think Fanging did a fantastic job. You know, the McKinsey are really, really good and summarize, distill into theory and, principle. Now that she's at a perfect stage, please, guys, provide some specifics.
I think so. You can have different terminologies for that, right? So I think, as Fanny rightly point out, nowadays, no matter you are a big pharma or a startup or biotech in the US or Europe, you can no longer ignore the presence of the Chinese biotech industry because of speed, because of the efficiency, because of its time efficiency as well as cost efficiency. And for a long time, people say, hey, I have nothing to do with that. They are great. Let them do their own work, right? But nowadays, you have seen your competitors among big farmers, right? They're chasing for a few deals. competing for deals in China, right? For small biotechs, if you don't leverage or manage or mitigate the competition, then you will be behind. Your competition will leverage China, and then your company will become lagging behind your competition. So I think to a degree that no one can ignore that. I often tell my friends in the U.S. biotech companies, whether through different channels, I said, no matter you like the China biotech industry or you hate it, you need to find a way to manage that. That means you need to find a way to leverage that, or you need to find a way to mitigate that. Because it will be, if you don't do that, your competition, not China, your competition in the US will leverage that. Then the competition will surpass you, right? So I think most biotech CEOs in the US or in the West nowadays, even in Korea and Japan, they realize that. So many Korean companies and the Japanese companies, now they are leveraging China, to do a lot of development work, right? So I think it's inevitable that the whole trend will continue. I think the issue is what's the best way to do that? I think the devils are always in the details. So how can you leverage that? Then because I'm kind of more like an operator. So the everything boils down to the execution. Who you partner with, who you go to work with, which CRO, CDMO you choose to work with, and who will be your partner. By the way, we were so lucky to find High School as our partner, and they are just terrific people in a company, and the speed of execution, everything is just great, right? So it's very important to find the right people, right organization to work with. I think that will then everybody will be able to leverage China, right? Everybody say, "Oh, I got to work with China," but then everything will boil down to who you work with, how you work with people, and what kind of people, whether you have your own people on the ground or not. Mark probably can tell you. I remember, I saw Mark the first time was by himself. Suddenly, he was surrounded by a bunch of his colleagues, based in China, working for him, already. So I think people quickly learn you have to have the boots on the ground to make things happen. So that's my 2 cents.
So I just want to start with a quick story because it reminded me of one of a conversation Leon and I had probably well over a year ago at this point, and I think I'm setting Leon up as sort of a trendsetter here. But at the when we were talking, I was telling him about some of the traditional Newco stuff we were doing, and he's like, "Yeah, we've been working on that for a while. It's already I've already been very deep in that for a few years." And he said, but by the way, I've been really excited about working with Western companies and trying to help them do stuff in Asia. And I think that was probably one of the, this goes back, a ways now. So I think it was probably one of the first times I'd heard of a group setting up to really efficiently help bring Western companies to China. So Leon, I think you were doing the reverse Newco work before there was a term for it. So kudos for being ahead of the curve. And I'll just sort of build on what James has said and maybe even be a little bit more tactical. The reverse Newco trend has been sort of ramping for a little while now. We've been seeing it actually was as part of our core thesis as a business, right? Our fund was actually set up to do two bidirectional investing. So we both invest in sort of assets coming out of Asia and sort of the traditional Newco type of models or the plethora of varieties that those now take. But we also are set up to invest in Western companies, right? And actually, that we've been very active in that space. Actually, early on this year, probably even more so than we've been active in Newcos out of China or Korea. And the thesis there has been get involved in some of these companies, sometimes even lead the rounds that they're going to be having with I'd say, our more traditional Western peers, but be that bridge and then use our capabilities on the ground in China, which we've been building up pretty extensively to really assist with the clinical development and strategy for those programs, right? I don't think we're set up to be all things for all people, but at least for our portfolio, we've been actively looking at IITs for them. We've also been actually just looking to augment existing clinical trials in the West with additional cohorts from the East. And it doesn't necessarily, I mean, a lot of that is China, but I would say also, since I know this panel is also including Korea here, that we've been actively looking at Korean cohorts as well and ways to sort of leverage the broader Asian ecosystem to get patients. I mean, there's also specific diseases where the Asian population is just much more. There's a lot more patients to work with, and so these are much more prevalent diseases, and so something that might be pretty rare in the U.S. Suddenly is a little bit less rare overseas, and you can use that to get your enrollment and actually get your studies pushed ahead. And so we see that as an important element to staying competitive. And I agree, if you don't take advantage of globally of the resources available, you're going to fall behind the competition, because guess what? Somebody's going to figure out how to do it in your space, and they're gonna ultimately get ahead of you, do things faster and cheaper, and you'll kind of lose some of your competitive edge. And I think one other element, just to highlight for these companies that are contemplating reverse Newco, there's a couple of different ways these forms take, right? I think they are, the most common way has been through partnership with an established Chinese company, sort of licensing deal where then that Chinese partner is taking things forward. But we're also seeing opportunities where, companies that are maybe more sophisticated or are able to build their own on the ground capability, building sort of Chinese subsidiaries or and partnering with directly with CROs and CDMOs to sort of run some of these Asian trials. So I think it really depends where you are in your development, how big China needs to be part of or Asia needs to be part of your clinical strategy, as to kind of how you execute. And so it's a pretty complex process, and that's, I think, one of the reasons why we get called into a lot of these as a partner into a number of these investment deals, because folks want some of the perspective we can bring. And I think it's also important to recognize that's where folks like Leon are able to add a lot of value, tactically working with a lot of these kind of companies too, and helping them think through these decision matrices. And I know founding does stuff with that as well, a lot of the stuff with that as well on a bigger picture level. So it's obviously important to have people who are kind of very knowledgeable in these spaces if you're going to make that kind of a play.
Yeah, probably I can share like a few kind of quick stories. It's not my client, but just I found it quite interesting. Very like echo what Mark and James said. So talking about this leverage China, either you call it Newco, reverse Newco, to really speed up. I think the recent one of the best example is the Candid Therapeutics, right? So everyone know the T cell engager for autoimmune diseases through B cell depletion is fantastic. Actually, their founder and CEO Ken Song just did a long interview podcast with the Long Run, one of the most famous. I listened to that twice. So he really mentioned how he did so kind of pretty much like both Newco and reverse Newco, if you may, right? So they fully leverage that. So long story short, they built their pipeline of five innovative best-in-class T cell engager assay pipeline with all of them from China, right? So two of them were when they licensed them were in the clinic. So pretty fantastic. And different from many other early mover of a China asset-backed Newco, they immediately start doing clinical development in China as well. So for the company with less than 50 people, I believe that's what they said, one third of their staff actually in China. So actually, I happen also know the CRO, the hospital they use, they are very, very good. Exactly like Mark said, that's kind of high Dutch, right? They build their own thing. They just fully embedded themselves into a China biotech ecosystem, right? So, and also because Ken Song being Ken Song, he's a serial entrepreneur, his fourth company, have a global footprint, the best investor. So he can start a trial both in China and Europe. right? Because we know FDA a little bit chaotic, to be honest. Nowadays, that's definitely a good example. So that's kind of a, high touch biotech version. We also saw even big pharma get into this game. They don't call them reverse Newco. They just, do a partnership with the leading biotech company, right? The best example probably is Eli Lilly and Innovent did a deal, right? There's no assay. Pretty much looks like Eli Lilly is gonna give Innovent some ideas, right? So the Innovent is gonna bring this from ideas for target nomination all the way to phase two. And Eli Lilly also did another one with in silica medicines, which has been making headlines everywhere. Similar story. I think the bottom line is the same thing as what Fanging pointed out, right? The pharma facing like a R&D productivity crisis in a sense, right? China's really helped them to do the crisis management in a sense, right? Like, so this apply to big pharma, also apply to biotech. That's my 2 cents. I know, James, are you back now? So I know you have a little bit bad connection before I kill you. Right, we can move on. Probably let's turn to Mark, right? So you actually spoke both on the East West Healthcare Summit, right? But also in BioChina, which is probably the largest in March, probably even one of the largest partner meeting in China. So beyond the official presentation, what was the underlying sentiment or unreported chatter you picked up regarding deal flow and investment outlook and these two conferences, especially BioChina? Specifically for you, right? Where were the treasure hunt dynamics, right? For this smaller funds, like use in big conference like BioChina that I heard over 30,000 people were there. It's like a gigantic, how to say, bazaar. So please take it from there.
Yeah, I mean, for those of you who haven't been to BioChina, it's worth going at some point. It's I think probably the largest convention center. I mean, maybe the one in Shanghai is even bigger, but one of the largest in the world, certainly larger than any of the ones I've been to in the US. And the conference is pretty impressive and covers a wide range of the biotech ecosystem, including a lot of the guys who make the tools for biotech companies, CDMOs, CROs. So really a pretty wide gamut of players. And I mean, the overall sentiment. It was interesting. There were a probably a higher number than in the past number of Western groups attending. So I think that's a positive in terms of globalizing the conference. I actually hosted a panel on Korean biotech in and their interplay with the Chinese ecosystem. So as it gets to that whole theme that James and I were and Funding have all brought up of the globalization of biotech more broadly, that I was literally on a panel with a bunch of Korean scientists in the midst of a large Chinese conference. So I think that was maybe testament to where things are heading. There continues to be sort of a push amongst a lot of the I guess community towards how do we get from the me better to the first in class, right, truly innovative drugs. I think there's really a push from the Chinese government as well as, which I think gets at funding when she was mentioning the 5-year plan, to also just frankly a push from a lot of the companies themselves to go beyond the they've gone from me to best in class. How do we get to first in class? And I think I actually did see in some of the conversations I kind of had off the record companies with some earlier stage pipelines, stuff coming out of universities that are a bit more on that cutting edge. And by the way, you're starting to see more when I talk to a lot of investors, both Western and Eastern investors, more of them are spending time hovering around university ecosystems, kind of what I'm used to seeing in Cambridge, Massachusetts, or Stanford. A similar kind of dynamic where people are looking to engage more directly with academics, and I think China has some really real strengths there in that in addition to having, of course, high quality science, they have a lot of capital being deployed towards translation of that science, right? And there's a lot of support for that from government sources, which means you don't have that valley of death that we're always struggling with in biotech, right? How do we get through from that, call it an interesting academic idea into actually a drug? And I think there's also a push from many of the academics to take their science and do more than just publish papers, but actually make stuff that will be impactful. So if I was looking out over the next few years, like what's the thing that I took away from BioChina? It's that I think China is ready to make that leap in the coming years from sort of best in class towards also being a key player in the first in class market.
Oh, James, welcome back. So let's
Yeah,
move on
sorry,
to, no
the
worries.
unexpected internet
Yeah.
interruptions. Yeah.
Let's move on to the next question. So obviously the elephant in the room is always the geopolitical factors, right? We know there's a war even somewhere, and there's like a tariff, 100% tariff just announced last week. So simply speaking, this factor, a lot of people still believe it's a critical consideration for cross-border collaboration, either like deal making, Newco, or like R&D collaboration, reverse Newco. So actually, let me ask you, you guys as a kind of a very pragmatic, let's say, operator, how important a geopolitical factor actually in today's, I would say, West Asia biotech collaboration, right? So let's say, in order to successfully navigate this landscape, what's your pragmatic, practical advice to your peers who want to get into the space or are doing this in the space? Probably I start with the funding.
Yeah, happy to. I think so. First of all, in terms of how you assess the geopolitical dynamics and some of the uncertainties, right? At least from the range of experts and folks that I have talked to across China and U.S. communities, for the time being, many actually don't believe that the cross-border licensing transactions will be under a lot of pressure. Why? Because the huge patent cliff that many big pharma companies are facing, right? So if you have China and Asia as a viable source to provide IP, provide innovative treatment options, especially early stage pipelines at a reasonable price, the question is why not? So that's the first one. The second, I think it's more about at the baseline. You of course you need to be mindful and be aware, be educated around what are the more clearly defined boundary conditions. For example, biosecure and the like. Right? You need to actually know what's the implications around that, around data transfer, etc. So I think you need to be at least kind of being aware, educated, not making naive actions or mistakes. Beyond that, I think it's for the larger kind of the large cap, mid cap companies. So far, again, my sense is the sentiment we have seen is, I would say, very few, or if any, companies are stopping or holding back from tapping into Asian innovation because of geopolitical uncertainties. That's probably the kind of sums up where I have seen so far.
Mark and James, any comments, any pragmatic advice to your peers, especially from the U.S. investment community?
Maybe I'll just throw out something. I feel like we spend a lot of time on these calls, as Leon, as you mentioned, talking about the geopolitics between China and the US, right? And I think we fail to mention the fact that probably the bigger impact on all of our business is really the global macro overall, right? So it's less about what regs China or the US are implementing that week around their policies. But as we saw with the recent war in Iran, just to maybe let the genie out of the bottle here, that has implications for interest rates, has implications for kind of risk tolerance amongst investors, and we see, and I can tell you from talking to a lot of other investors that kind of stuff seizes up the markets, and then suddenly deals don't get done, right? If people don't know what's going on in the global market, transactions period don't happen, and people are sitting on their hands waiting for more certainty, and that actually has a very big implication for the development of drugs, right? Obviously, you need deals, you need capital in order for this market to function. It's actually probably one of the more deal dependent sectors out there. And so I think we're very susceptible to just sort of global macro overall and geopolitical uncertainty and volatility. And I think that's going to continue to create these gyrations. And I think it's something that, as if you're whether you're a biotech operator or whether you're a biotech investor, something you really got to keep front and center, because that can really catch you off guard and can cost you a lot of money if you're not prepared. And I think that goes far beyond just the U.S.-China relations, which seem to be, as Fanging said, a little bit of a détente at this point, or at least sort of like some level of stabilization and mutual understanding, even if it's not maybe back to as warm as relations as things might have been, a number of years ago.
James, any comments as well before we move on to the last
I
one?
really don't have any useful comment other than I'm always optimistic, very optimistic guy. So I think it's life will goes on. Life always goes on. So so you just focus on what matters to your company the most, and so.
All right, fantastic. Let's move on to the very last question. So please keep it really short. We're almost on top of hours. So James, what's the most relevant indicator you're gonna look at in the remaining 3 quarters of this year in our space?
Indicator for what? I'm sorry.
How healthy, how healthy the market gonna be between this kind of East-West biotech collaboration?
I think the U.S. market is continue. You see, in past 2 weeks, how many M&A happen, right? And I think the IPO market, it definitely is going to open further. And I'm very optimistic about the U.S. market. As for the Hong Kong market, is so far so good. I think it will continue. So I think the deal will continue. You see the first quarter, as you mentioned, right? It already surpassed last year. So I think that will continue as well. Now, in terms of low-hanging fruits, probably they will be gone. They are gone or will be less and less. However, I think people will continue to leverage as I always said, the speed and effectiveness of the drug development in China or in Asia. So I think I don't think it's any factors can stop that. It may slow down a little bit, but I don't think anything can stop that. So I'm very optimistic about the whole trend.
Sounds good. So you think there are key indicator for the relevance of this market is like a U.S. public market, Hong Kong biotech public market, and deal making between the East and West interface. So Mark, let's turn to you. Anything else you want your colleagues and peers to pay attention to as an indicator?
I think James hit on most of the major ones, right? What I would say is we've already had a pretty strong run for Kosdaq, for Hang Seng, for a number of these exchanges. So I think even if those exchanges are a little bit flat this year, I still think that's a pretty positive sign. It might just be sort of valuations catching up with kind of market momentum and sort of level setting. What I think we really do want to see, and I sort of agree with James. I'm cautiously optimistic about this. Is really the Nasdaq, right? It's seeing that the biotech, U.S. biotech sector, a number of IPOs sort of pick up after a number of years of decline. And obviously last year was a good start, but I think there's still a long, a good way for good additional runway ahead of us here. So I'm sort of optimistic for a stronger public market 2026 IPO landscape in the U.S.
Fanging, I'll leave the last word for you. Fanging, you mute yourself. Please unmute.
Both Mark and James have hit spot on. I fully echo. Maybe for me personally, I think there's two areas I would be very curious just to keep an eye on. One is actually the number of IPOs through Hong Kong Exchange Chapter 18A. What I heard is there are a high volume of companies being queued. So curious to see how many actually could be able to really get through that. Secondly, I would love to see if there will be more co-development and co-commercialization deals being announced in the rest of the year. That's a signal in my mind, really looking at how many Chinese companies, how many Chinese originated assets would actually have the opportunity to use these assets and construct as a vehicle to build their ex-China presence slowly or gradually. So those two will be my addition, along with a lot of the great metrics that both James and Marc have shared.
All right, fantastic. I think that's pretty much all our questions. And also, if for the audience, if you have any question, please feel free to type a question in the chat box, the Q&A box. We're gonna pick up them. In the meantime, I'm gonna do a little bit of advertisement of our events from ICE community. So actually, I see the screen is coming up now. A lot of us actually gonna go to AACR. In less than 2 weeks now. So obviously, as a tradition, we have an in-person networking event, WeChat group on AACR in collaboration with BioPlus. Please scan the QR code on the left to join the WeChat group so we can meet everyone in the really, really nice San Diego within 2 weeks. In the meantime, we on ICE community also collaborated with BioPlus. We have in-person events on April 21st. And we're going to talk about a lot of topics we mentioned today, especially like, China's efficient R&D, particularly first in human clinical development in one of the panel, as well as many other topics. So please sign up on the events with the QR code on the right, so you can join us and listen to the true experts, the operators in this space, exciting space. And one more thing, we are on Substack. That's very important. I think I heard this is really trendy. A lot of knowledge workers, analysts, journalists, and people with a curious mind are on Substack. We're on Substack as well. As you know, we have 2 flagship programs. You are listening to or watching BioVerse. The other one is Asian Biotechs in a Bar, which is a weekly newsletter. Going forward, probably in a few weeks, we can exclusively only publish our newsletter on Substack. So and also, of course, the replay of this video going to be posted on the Substack, and also the presentation going to be exclusively available to the paid members of our Substack subscribers. So please scan the QR code on the left and join our Substack. And also, you can see there's 4 more episodes in our pipeline for the future. AACR is coming. After AACR, going to get a few experts to really recap the highlights of AACR. Then we're going to move on to revisit the AI. And then, of course, in June, there's a lot of conferences. The 2 most important ones probably going to be ADA, American Diabetes Association Conference, and ASCO in Chicago. And then, we haven't decided date yet. We'll talk about the booming medical tourism in Asia. That's all I have for this. And I'm give a little bit time, see whether there's any questions from the audience. If you do have it, feel free to type your question or raise your hand. If not, we may wrap up and wish everyone a good day. Looks like there's no question. I think people are still digesting so much information. That's also good. So let me say, double check. Yeah, indeed, there's no question. So thank you, Marc, Fanging, and James for the very insightful discussion. And thank you, everyone, for dialing in today's podcast style webinar. I will see you next time. Thank you, everyone. Take care.
Thank you.
Thank you. Thanks, Leon.
Thank you.
Bye.